repeat it. But Nigeria has 14 million vehicles on the road. We're not bringing any new vehicles in. We're not producing many new vehicles because of the economic recession. So in fact, our stock of trucks and automobiles is actually deteriorating because we're not investing enough in that because of that. So that's a simple example of how you need to have this investment rate of about 30% to drive economic growth, and we're well short of it. So let me relate it to a couple of other economic numbers here. And again, we chose the wrong color for sub-Saharan Africa, but so let me just talk through this for a minute. The left-hand side shows growth rates of Asia, Latin America, sub-Saharan Africa, and in the last couple of years, sub-Saharan Africa has dipped, sadly. But on the right-hand side, we show it disaggregated out between different countries. And you can see there's a bar that goes negative. That's the oil-producing countries. So Angola, Nigeria, Algeria, we've all had a very difficult time economically. There's also the yellow bar, which is quite low. But the bar that I wanted you to focus on right now is the red bar that's quite high, which is 6% a year for the last few years. Those are the sub-Saharan Africa countries that do not rely on commodities. And they are growing at 6% a year. And when we look at the bad numbers for sub-Saharan Africa, there are two countries that are pulling us down. One is South Africa, and one is Nigeria, the giant. So they make the average pull down. But when we look around the continent, we look at Uganda, we look at Ethiopia, we look at Cote d'Ivoire, we look at Namibia. There are countries that are doing very well, and we can do as well or better than any of these countries. We have the entrepreneurial spirit, we have the size of the market, we have the potential, and that's what we need to tap into. So there's no doubt in my mind that we can grow in an inclusive way at 6 to 8%, or better in some years, if we get the right level of investment. So let me talk for a few minutes about oil. This is an oil price chart. It shows oil shooting up to about $140 in 2008, for those of you who remember that far back. More recent times we're up about 100. Oil obviously crashed down. What's the point of this chart? The point of this chart is that no one in Nigeria should be thinking about $100 oil. $100 oil was not the norm. $100 in oil is not economically sustainable. Some of you may think I'm American. I'm not American. I mean, I like Americans. I went to school there. My son went. I'm Canadian, in fact. So you can't blame me for Donald Trump. But in Canada, you may have heard of the tar sands. Where we basically oil, and you have it here, bitumen. The Ministry of Mines is working on the bitumen program. So in Canada, we basically have an infinite amount of oil that comes from bitumen. The total cost to produce that bitumen oil is about $60 to $70. So we cannot sustainably have $100 oil if there's a supply at 60 to 70. But we also have Iran coming on stream, Algeria with massive reserves. We have big reserves that are low cost. And I think the world is moving away from oil. In fact, I personally think that Nigeria should be preparing for the day when oil is $20. Maybe oil is going to go to zero if we get solar energy working, wind energy. But no one in this room, no one listening today should be basing any kind of forward economic thinking for this country on oil going back up. But more than that, I want this group to really recognize that Nigeria is not an oil nation. So what we have on this chart is a little bit about the price on the left, but the right-hand side is the production of oil. We all know the difficulties that we've had with oil production. The last number on the red chart that you can't quite see is about 1.5 million barrels a day. We hope it's coming back, which has obviously helped us a little bit. But I want you to think about it for a minute from the perspective that let's say we produce 2.5 million barrels of oil a day. So that's the target for the federal government. If we produced 2.5 billion barrels of oil a day, we would produce close to 900 million barrels a year. There's 180 million Nigerians. So that means for each Nigerian, we would produce 5 barrels of oil a day. Now, about half of the value of the oil goes to the IOC and the lifting cost, etc. So what's left over to build the Nigerian economy is 2.5 barrels of oil per person per year. Now, yesterday oil traded at $51, so it tells you that what's available is $125 per person per year. Now, I don't need to tell you in this room, that's not a very big number. We are not an oil economy. And the faster that we recognize that every business leader, every politician, every citizen, the better off we're going to be. Okay, so let me relate some of this to the current economic situation. So the left-hand side of this chart shows the quarterly, the growth rate for each quarter. Now, just so people are clear on this, when the government announces a growth rate of 2% for the quarter, it doesn't mean there was 2% growth in the quarter. It means that the annualized growth rate for that quarter was 2%. So it effectively grew 0.5%. Anyway, as we all know, for the last 4 quarters, the quarter ending in December 2016, we had negative growth. And in total for the 2016, we shrunk by 1.6% is the official number. Now, I want you to think back to the first demographic chart we had. So we shrunk by 1.6%, and our population grew by 2.8%. So effectively, the income per capita in the country declined by 4.5%. Now, if you take a country that had no population growth like Germany, and you had a headline that said our economy shrunk by 4.5%, you would really recognize that as an economic catastrophe. And that's what's happened in this country. And we all know personally the hardship and the increase in poverty that came about because of that economic hit. But the other implication about that is it's not good enough to come out of recession. So I've seen some very prominent commentators come out and say we're about to come out of recession. I've seen forecasts, I think IMF, that we're going to grow at 0.7% this year. I think the official federal government forecast that the Minister of Finance can comment on later is maybe 2.2%. 2.2% is obviously much better than shrinking by 1.6%. But if we grow at 2.2%, we are still going backwards. We need, as I said, to get the growth at minimum of 5% for this country. So let me relate a little bit to, because everyone, FX issue, foreign exchange. So what this chart shows is the collapse in the oil revenue. So on the top it shows we roughly, if you go back to the first quarter of 2014, we earned about $22 billion that quarter on our export of oil. By the last quarter of last year, in December 2016, that number had shrunk to about $7 billion. So 2/3 of the revenue that we earned from oil, our FX revenue, went away. And as people in this room know, oil, unfortunately, has represented 90% of our foreign exchange earnings, which have caused incredible hardship. So the bottom shows just what's happened to imports, and obviously, as we've had no dollars to be able to import, imports have collapsed as well. But it's not all bad news. This chart shows the orange and red part show that we spend about 40% of our dollars, or our FX, on just 2 things, which are importing refined petroleum and food. And the good news is, in fact, this is fixable. In fact, about 9 years ago, PwC coined the term agricultural superpower for Nigeria, and you can really see it's coming true. And with the Dangote refinery and other modular refineries come on stream very shortly, within 2 or 3 years, in fact, the 40% of this demand for FX is going to go away because we won't be importing food and we won't be importing refined petroleum. So even though we're really squeezed for now, I'm optimistic on that side. Okay, so this chart, I want to spend quite a while on this chart because it really has a number of critical implications for the country, and it's only got a few bars on it, so you can see it. I'm sorry if you listened, I'm sure you were bored, but listening to my biography, my first degree was in mathematics, so that's why I brought so much mathematics to this. But the orange chart shows the inflows of oil, which was up around 90, in annual terms, up around $90 billion. As I said, it shrunk by 2/3, so between 30 and 35 billion in 2016. So that's the orange bar. Now, if you think back to the chart with the yellow line that was difficult to see, we said that Nigeria had gross capital formation of 15%. And through 2012, 2013, 2014, 2015, that was flat, 15%. So we had all this oil surplus money, and yet our investment was not going up. So what was the implication of that? Well, we took all of it, most of it, and we either consumed it, squandered it, or diverted it. We did not invest it. So we had a windfall of probably $300 to $400 billion